how do these tariffs affect small oil producers specifically?
Well, that's a great question. And on that front, basically, what we would see is the tariffs are what's going to do it. So, how much product are we getting from China? And can our producers and manufacturers here in America be proud Americans, get that price and battle the price that China's doing? So that's really what we're looking out for. But again, kind of like the majors are doing as we prepare for 2025, we already have prices in place to buy our pipe, to buy our equipment for the drilling projects we have this year.
All right, back now here with you on the KFYR Plus News Desk. And, well, coming up at the end of this month, April 30th to be exact, it will mark now President Trump's first 100 days of his second term. Once again, making his stance on the oil and gas industry clear is drill, baby, drill. But while the phrase may energize some, many West Texas oil producers are making a more cautious approach. Trump's vocal support for domestic drilling has been met with some mixed reactions. While many in the industry appreciate having an advocate in the White House, some remain weary of the economic and policy hurdles that they continue to face. Joining me right now is an oil and gas expert and a friend of the program, Ray Treviño. Welcome back to the show, Mr. Treviño. Ray, let's start with a question that many will want to know the answer to. Can you elaborate on how the current tariff policies are creating uncertainty and affecting investment decisions within the oil and gas sector?
You know, that's a great question. And really, the truth is, at the moment, the two are completely separate, minus the actual stock market where everybody really focuses, and all the people there on Wall Street are doing things because of uncertainty and dropping the price of oil. And what I mean by that is, yes, the tariffs are coming. Obviously, we are in a trade war with China. You can skin a cat in many different ways, but it's here. And I do believe that we're in a trade war. So we will see steel prices go up here over the next little bit of time, and they've actually gone up a little bit here domestically. So from that standpoint, we will see some of the materials that we use go up. Now, that being said, the other thing that we're really watching right now is OPEC. And OPEC has so much infighting that nobody's talking about. And that's another reason why they're driving up the price, is so that OPEC can get the countries that are producing more to basically dishearten them from producing more and get them back to the agreed production numbers that they need to be at.
Ray, we were led to believe that once Mr. Trump got into the White House, we would all see cheaper gasoline. Right now, nationally, on average, we're seeing a gasoline at about $3.08 a gallon. What's stopping that price from going down?
Well, I believe if you check, and Jay, I don't have numbers obviously in front of me, but we should be close to a 3-year low on the actual price of gasoline right now. What we're seeing is basically the understanding of what the economy and how economics work. Right now, we do know that we are getting our inflation down, and we're trying to build a stronger economy. And the best way to do that is to get transportation costs down, meaning get the energy costs down, which then means everyday Americans will be able to spend more money and boost and make this American economy even that much stronger.
Oil executives issued a scathing criticism of President Trump's policies in an anonymous response to a survey by the Federal Reserve Bank of Dallas. They said Trump's tariffs and his drill baby drill message are creating uncertainty and making it difficult to plan for future projects. Are you seeing any truth to this?
Well, first of all, for anybody that's being anonymous in what they're saying, I will not really comment on that. Obviously, right now, the uncertainty is coming from the market. Obviously, the Trump tariff threats are working, the triple T there, right? Trump tariff threats. They're working. We got countries coming to the table to actually make real free trade agreements with the United States of America. And make no doubt about it, the Chinese economy cannot survive without the United States economy, and they know that. So whoever these are, the one thing they are saying that may be true is that It is creating uncertainty. However, if these individuals in the oil and gas industry are being anonymous, I won't sit here and talk to people that I don't know who it is talking.
How are companies adapting their planning and project management strategies in response to some of these uncertainties with this project tariff policy?
Great question, Jay. Easy answer is with a grain of salt. Obviously, prices have dropped. What also we're watching again is OPEC, and now that they are doing a continuous addition each month of about 150,000 barrels, we kind of can see where that's going to settle out. And also, we're still watching Iran and to see if Trump puts sanctions on Iran, which will then take probably another 2 million barrels off the market. But what some of the larger companies are doing is watching the $60 oil to see exactly what they can and can't drill to still get their profit margins where they need to go. So some of these companies may not really be able to drill, baby drill. However, what I expect them to do is go back into older wells, go into wells that maybe need a little bit of work and add production that way. Also, I do expect that the smaller producers like Pecos and other independents here in America, especially in Texas, to continue to drill because we have more control right now over the price in the sense of how we can drill and really streamline to still make not only a profit for the company, but also for our investors.
Ray, how have the steel tariffs specifically impacted the cost structure of drilling projects that you got, and what are some long-term implications for the industry if these tariffs continue?
You know, that's a great question. And I actually had a great conversation with a 35-year veteran that owns a bigger company than Pecos, but it's also an independent. And we're watching them. You know, steel here in America has gone up over 20% itself lately, and that's not including the tariffs on the Chinese steel. So we are doing our best to hedge in the sense of, hey, we're trying to buy supplies and materials now so that if those prices go up, we'll at least have that much more of an advantage in our drilling projects for 2025.
Okay. White House advisor Peter Navarro aims to push oil prices down to $50 a barrel to fight inflation. How realistic is that goal of pushing oil prices down to $50 a barrel, and what would be the broader economic implication at that price point?
Well, as we all know, we saw negative oil here almost 5 years ago to the day. Actually, yeah, 5 years ago, almost to the day, we saw negative oil prices. So the threat of $50 oil is definitely more likely than it would have been 5 years ago, if that analogy makes sense. Right now, though, we saw it creep up, and I do expect it to stay. I'm really thinking at that $60. I'd like to think that is the bottom for right now. I don't think we'll go any lower than that. So obviously I'm recorded, so we'll see. But if we did have $50 oil, that means gasoline prices will be lower. That means transportation costs will be lower, which will then mean inflation is even that much lower. So on a whole, I could sit here and say the lower the price of oil, the better it is for the American economy right now to do a great reset to get us back to where home prices are a lot lower, interest rates for homes are lower, and not to mention food and groceries would be even that much lower. So on a whole, you know, that would probably be the implications on it if we actually went to $50 oil.
Just for context, Ray, give the viewers an idea of where your sweet spot is for a barrel of oil.
Well, right now, our sweet spot is still at that $65 to $75 price range. And every company is different, Jay. The majors may be a little bit higher, they might be a little bit lower. But then those mid majors are the ones that are really looking at that $60 oil. And I definitely ask anybody that's listening to the oil and gas CEOs, look what kind of company do they have? Are they an independent like Pecos, who has more control over how they sell and how they negotiate? Or is it a mid-major, or is it a major like a Chevron or Exxon where they've already priced things out months before this began? So that's what I would definitely recommend individuals to watch out for.
Is there a risk of oversupply in the market if drilling is ramped up significantly? And what would this do to oil prices and the industry stability?
At this time, as of we talk right now, the short answer is no. And the reason is we have not filled up the strategic petroleum reserves, Jay. And that would be something that would actually be so beneficial, not only to strike a deal with all the oil companies that everybody continues to earn a dollar, but most importantly, that also would be tremendous for the United States and every single citizen, blue and red, because that means we would have that much more energy security, which is national security. So if we actually fill up the reserves, then you were to ask me that question, I'd say we could be in for a fun little roller coaster of a debt.
Yeah. Is the administration working on something like that right now? Do you know?
I won't confirm or deny that this administration is working with some of the great minds in the oil and gas industry on trying to figure out what's a good price point to fill up those reserves, because God knows we need to get them filled, because they are for times of emergency in the United States and not in times of politics and elections and selling to our adversaries in China.
Given the current market conditions and flat drilling rig count, is it an aggressive push now for more drilling economically viable? Is it viable to start drilling?
Well, I do think so, but we also need to build, baby, build during this time. We need to add more natural gas pipelines across this great nation so that we can get affordable, reliable, and abundant energy to everyone. We also need to update our infrastructure that we have. And we also need to probably finish that Keystone pipeline to get oil coming in from Canada. So those are things that we really need to be looking at right now during this time. And if we could actually add those pipelines, we would need to get more natural gas and oil on the market to where, guess what? Drill, baby, drill is actually just very important. Keep in mind also, we are still the #1 producer of oil in the world. We did drop about 6 rigs here in Texas about a week ago, but that still isn't a significant hit just yet.
Okay. How do these tariffs affect small oil producers specifically?
Well, that's a great question. And on that front, basically, what we would see is the tariffs are what's going to do it. So, how much product are we getting from China? And can our producers and manufacturers here in America be proud Americans, get that price and battle the price that China's doing? So that's really what we're looking out for. But again, kind of like the majors are doing, as we prepare for 2025, we already have prices in place to buy our pipe, to buy our equipment for the drilling projects we have this year.
Well, before we conclude, Ray, what do you see as some of the big opportunities and some of the bigger challenges in the industry coming up in the not so, let's just say, the next few years?
Right now, I would say one of the biggest opportunities is drill, baby, drill, and continue to produce oil, because guess what? It is going to come back. We go back to 2020 when we went negative, and within 6 months, oil was at $35, and then it was even up at $75. So that is a great way to actually still continue to invest in this industry. So that's the opportunity. The challenge is President Trump has done tremendous for all Americans. And that uncertainty that he adds to the market is still going to be a fun challenge, no matter who you are. But I do believe a lot of people like myself believe that President Trump has America in his thoughts and prayers, and that we can do a great reset to actually turn the economy around, get prices more affordable, and make it to where America is actually winning again in ways when the U.S. economy is still the strongest, and get also the value of the dollar back up across the world.
Ray Treviño, thank you so much for your insights. As always, sir, I appreciate it, and I hope you and your family have a great Easter.
Thank you. I hope you all as well. Thank you all, and happy Easter.
Thank you, bud.